Good morning, good morning. How's everyone doing out there? Going to talk a little bit more about what's going on in these markets. So let's have some fun here. We've got this also simulcasting live on YouTube. And we'll be here on Discord, so just on Bookmap's Discord. So we're going to fire off this presentation. If you're able to see the video, that's great. If you're not seeing the video, you can check it out on YouTube or Bookmap's Discord. And there's going to be a lot of interactive charts and stuff, so just giving you all a heads up. So this stream is going to be called Back to the Futures. We're going to have a little fun with the name. Why wouldn't we, right? So a little bit about me. I've been trading since 2005. Seems like a long time. It's kind of been a long time, about 19 years now. I've seen a lot in these markets as time has passed. Went through the great financial crisis, learned a lot about the interconnectivity between different markets, which is going to be a theme that we talk about today, how these different markets interconnect with each other. And of course, if anyone has any questions, I recommend just popping them in on the YouTube chat. You can reply to the spaces, or you can tag me in on Discord and let me know. But I really enjoy trading. I really enjoy learning. I enjoy sharing and teaching, and it all kind of comes together in what we're doing today. So if you want to learn more about my work, you can visit Traderade.com. It's where we cover short to intermediate term trading. We have tools, including a new gamma profiler that works on every optionable stock, ETF, and index that I just released last night. We also have some really cool stuff that ties right into Bookmap, which I'll be talking about today. You can also check us out at MacroVisor, where we make macro actionable. We take big picture themes, we marry them with momentum, and we find longer term investment opportunities. You're welcome to follow me on my YouTube. That's youtube.com/@mayhem4markets, Mayhem for Markets. And if you're interested in getting up to 40% off of Bookmap, you can do so by visiting Traderade.com/bookmap, and you can check out the deals on the lower end of that page. So let's do every person's part of this weekly stream, and that is where I cover the disclaimer. All Bookmap Ltd. materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. So now that everyone's favorite part of the stream is over, you can all go. I'm kidding. I'm kidding. So, Bookmap asked me to add this in. Pair your Discord to your email. You get some special features on the community. Worth checking that out. You can just scan the QR code on screen. If you miss it, you can always go back and check it out. So, we've got a pretty big amount of open options positioning around this SPX 4950 level. Could act a little bit like a magnet, kind of pulling us into that area. I feel like we're going to be trading between 4,900 and 5,000 on S&P cash for a little while, just because we have so much positioning here. We're kind of clenched by gamma in the here and now. And so we've got 5,000 as a ceiling, we've got 4,900 as a bit of a floor. We're kind of stuck in this magnet level around 4,950. You know, as we approach the open here, we're trading at 49.49. So, you know, let's see how that level behaves today. We're going to go through some of the specific charts for all of these different futures contracts that I'm tracking in a little bit. But I wanted to show the options component of it as well. When we look at the net exposure, and by the way, again, we've got these charts for every optionable ETF and stock on our Discord now. So it's pretty cool. You can just bring them up by command. You can see some of that overhead call positioning that may act as resistance right here around 49.50, above that around 5,000. So those are key levels to just pay attention to as we navigate not just today, but the rest of the trading week. And we are into positive gamma territory here. What does that mean? It means that you have this implicit buy the dip, sell the rip mentality from dealers and how they're going to be hedging their positioning, right? So the gamma flip level based on our naive model right now is 4,883. The current spot price, of course, going into yesterday's close, 4,948. Pre-open today, 4,949. Not much of a difference there, but you know, we've got a little ways before we sink back into negative gamma. So nothing to be too concerned about in that regard in the here and now. And again, 4,900, such a large level of positioning, wouldn't be too surprised to see that act as a bit of support. Now, let's talk about something rather extraordinary here. This is the most that the mega caps have ever outperformed the S&P. That's pretty incredible. Look at this. This is a chart of the New York FANG Index versus the market cap weighted S&P. If you put the equal weight on the other side of this ratio, it looks even more extreme. So it just suggests that we're in this very interesting, if not unprecedented, era of concentration. Really, at this point, it's like the Mag 5, right? So that's an area to pay a lot of attention to. Obviously, if they keep performing, the markets can keep moving higher. But if anything really happens that erodes the bid for these things, because the rest of the market isn't performing the same, it's not really carrying the weight, that could be a pretty big risk factor here. So, you know, just contextualize this in the back of your minds that what's really been driving the market over the last year, and particularly what we see in the beginning of this year, has been those Mag 5 stocks. And when we compare large cap high beta versus large cap low vol, we can see we are very much in the greed zone. This is a ratio chart that I put together that I like to watch because it gives me a sense of the sentiment in the market as expressed by flows and positioning. And we can see people want that high beta. They're eschewing anything remotely defensive. We had a little bit of a head fake earlier this year that it looked like there was going to be a rotation into more defensive stocks. That did not end up being the case, unfortunately. So we do have still this prevalence of greed, which makes me just a little bit more cautious adding too much to risk here, because typically when we're very, very firmly in the greed zone, not a lot of great things happen for further upside. And we're going to look on screen here. This is the number of stocks in the NASDAQ composite that are above their 20-day moving average. It's only 35%, which suggests there's not the best breadth here. And that's another component of what we were talking about in that earlier chart. Sure, there are 5 stocks that are absolutely killing it. I mean, look at NVIDIA, you know, trading what, like $700 a share. It's up something like 40% this year. It's hard to get at, you know, it's hard to try to bet against something like that. But when you drill underneath the surface of the NASDAQ and you look for the stocks that are, you know, making up more of the index, that is to say, a lot of the mid caps, the small caps, even some of the large caps, that performance is not happening there. There's only 35% of them above their 20-day moving averages, which kind of tells you things aren't so great there. Similarly, the number of NASDAQ stocks above their 200-day moving averages is beginning to roll over a bit here. Now, I've zoomed this chart in. You may have recalled seeing this chart before, kind of zoomed out and showing that it used to crest much higher. But this is a different kind of rally. This is a different kind of market. And so we see it cresting at much lower levels. That is to say, again, reinforcing that theme, that when breadth gets to a certain point, much lower than it typically would during times of excitement, we tend to roll over again. And this might be the 3rd time that we see that, and we're now, again, moving below that 45 level that I've marked. Because when I'm looking at this over this rally, when we move below 45, we tend to get continuation to the downside. So just something to contextualize. There is some risk here. I don't want to be very risk on with swing trades and high beta and tech heavy parts in the market because of what we're seeing here. And that has been where the leadership has been, the high beta, the mega cap tech. So just something to contextualize as we look at risk and reward moving forward. This is a chart of the NASDAQ new highs versus new lows. We can see new lows thoroughly outpaced new highs yesterday. Not a big surprise given it was a bit of a drawdown, but you can see that this really hasn't been a very robust market. There hasn't been a lot of new highs when we're getting these rallies. If you take this chart and you zoom it out over a much longer time horizon, what you can see is that actually there's a lot less new highs during this particular market than what we've seen in the past. Okay, so if you look at the 2021 bull market, you can see new highs were thoroughly outpacing new lows. There was long stretches of many, many new highs being made in the composite versus new lows. Not so much this time. Again, speaking to that pretty remarkable concentration. This is the NASDAQ McClellan oscillator. Similar picture. We can see breadth and momentum turning lower. So even though we've been gracing new all-time highs and really rallying pretty hard, it's just been a handful of stocks that's been carrying that. And that's one of the things that I think gives us reason to concentrate more on what's going on with Nvidia, what's going on with Microsoft and with Meta and some of these other leaders, because if they start to show any weakness, then we could be in trouble. Now, here's a chart of skew. This is the other side of the book, right? We can't just talk about all the risks. We got to talk about some of the mitigating factors too. Skew is very high. That suggests we're in a well-hedged market regime. We're also outside of that period of time that Jem Carson likes to call the window of weakness. We're now back in that period of time where you've got that passive bid from decaying delta and theta bidding up the market, particularly in the first and last hour of trading, right? So this elevated skew means you've got more dealers buying back those S&P short positions. That's liquidity positive. That adds some liquidity in. So, I wouldn't be too surprised as we open today that we get a decent bid into this elevated skew, and that could offset any kind of selling pressure. We saw the same yesterday. People really wanted to sell at the open, but skew for a good chunk of that first hour overwhelmed it because there was so much of those dealers buying back those hedges as the hedges lost value, or as the puts lost value, I should say. They were able to reduce the amount of short exposure they had for S&P futures, and that drives a bid back into the market. Now, here's something a little bit cautionary. We can see the NASDAQ composite has become more rate sensitive again, and we see the 10-year note futures rolling over, but the NASDAQ continuing to rally. Just a little bit cautionary here. These things don't always trade the same, so it doesn't mean we have to look at this as a guide, say, oh, it absolutely has to go down. It just means that the pressure that rising rates may exert, or dropping 10-year note prices may exert on tech, is something to take into consideration. Similarly, we've got the S&P versus the inverted VIX, and you've got the same kind of picture here, which just sort of suggests that the VIX says, hey, maybe we're a little bit expensive here. We do see more demand for hedges, as we saw with that chart of skew, so that could be part of it as well. Now let's get into the charts for the S&P 500. Futures on screen, we can see it looks just a little bit extended above that channel. We got tests of the 20-day moving average several times this year. We almost had one recently, but it seems like that's a level that the market likes to rebid this thing. So I don't want to get out of the way of this thing. If it's continuing to get that bid at the 20-day moving average, every reason to use that as a level to stop out from for long positions. On the other side of this, if we start to push below that 20-day moving average and back into the channel, we could start to navigate back into some of those lower areas of the channel. As we see, this is a pattern that's been pretty well established since summer. So let's drill in a little bit more about where that could go. We can see today, this is a range that I'm looking at. The reason I'm looking at this range here is because I think if we can break above the top side here, we've got momentum higher, right? And that's going to be about 49.80.75 on ES, that front month contract. That's where I'd be looking at, okay, we're broken out of this range. We can at least test those old highs again. Maybe we can get all the way to 5,000 on ES. On the other side, however, if we break below 49.54.25, that's this area here, this line, I think we could actually start to make a move lower. Not a lot, but maybe 49.33.25 would be the next area I'd be watching. So we're in a market that's kind of at rest. It needs to decide its direction. It's more balanced right now. It was pretty balanced for a good chunk of yesterday, particularly as we got closer to the close. So it's building up. It's like a spring that's kind of coiling up and getting ready to release momentum. The direction is the question, and that's why I've plotted out that we're in this pivot zone, and we need to see the market tell us where it wants to go before we get too much conviction in long or short trades. The NASDAQ, kind of a similar chart here. We can see it's wedged higher. It looks a little more extended than the S&P just on a technical basis, but at the same time, we've got to respect the price action. And again, the 20-day moving average has been really crucial. We got a bounce from it recently, a clean bounce, I should say. And now we're kind of peaking out just around old highs. So let's zoom in just a little bit on the tech-laden NASDAQ here. We're just about 14 minutes from the open. I promise we'll get right into Bookmap as we get into the open here. This is the NASDAQ on screen, similar look as the S&P. We've got the choice of either breaking higher, right, if we can break above this top pivot, or breaking down. And this is very similar outlook to the S&P. It's a very similar chart, and I think it'll be a very similar outcome. I like to look at the NASDAQ first. The NASDAQ has been the momentum leader for the vast majority of this rally, not just from October 2022, but really from 2020, that crash and forward. The NASDAQ absolutely left everything else behind. So I pay more attention to it during the day because it tends to lead momentum. So I'm going to be watching how it moves primarily when we look at Bookmap as we go into it and dive into the microstructure. Here's crude oil on screen. Boy, this thing just can't get out of its own way. As I put this chart up, I could see that, you know, you've got this positive trend line, but it's just bumping its head up against the bottom of that trend line. We'll see if it can break above there. If it can, I think you've got some energy that can be released to the upside. But either way, we're kind of in a sticky area of the volume profile. This is a place where a lot of people like to transact. Wouldn't be too surprised if we consolidate here for a bit if we don't see much of a catalyst. And here's a closer look at crude for those that are trying to day trade it. Again, I'm looking at putting it in that pivot penalty box. I really need to see a break above 73, 67.50 to get some sense that we've got some upside here. Otherwise, if we break below 72.55, I think we can revisit those local lows. So a little bit more upside potential than downside, but we still need to see the markets make their choice, as it were. And then we've got the 10-year note futures. This has been on a lot of people's minds lately because we've had this surge in interest rates over the last several days. Really, last week when we got services PMI and prices came in way higher than expected, that caused interest rates to start to surge. That put some pressure on markets. And I think that as the 10-year note goes, we're going to see more influence on equity risk appetite as well. So this is one where we're right at this key level. If we break down here, I think we've actually got quite a bit room lower. So I'm looking at this very, very carefully. Now, if we can push above that point of control and clear prior resistance, maybe we've got room for rates to move lower. But for now, we've got a big 10-year auction coming up this week. I believe it's tomorrow. So that's going to be pretty important to watch to see what the appetite is for this longer duration U.S. debt. Next up, we've got gold. Gold is just not really wanting to do much. This thing has been in a longer-term consolidation, so I'm not really going to bother to zoom in. I need to see it break above 2100. I really want to see this old area cleared out to feel like we've got room for new highs. Otherwise, this thing is just sort of stuck in this box, and I'm not really tempted by it. Again, also, if we break below the low, I think we've still got some room lower here, about 1915. So into the decision zone, we've got to see what gold wants to do. The dollar is giving us a sense, and rates are giving us a sense that maybe the shiny metal is going to have some trouble moving ahead. Here's the dollar on screen. We can see that epic breakout. This is something that we were talking about on MacroVisor and our dashboard, that, you know, really we could see more of a push higher in the dollar just based on the fact that it's broken out of this consolidation. And indeed, we've pushed right back into another area of resistance right here. But this dollar move is powerful. RSI is moving higher. You've got a huge amount of volume in the ICE futures contract. That tells me there's a lot of interest. And on the other side of it, you got positioning lopsided short the dollar again. So I think we could have more room here, but I need to see it push higher. So last slide of this deck, we're going to dive right into Bookmap. If you want to learn more about my work, visit Traderade and MacroVisor. I work with an amazing team. We focus on education, actionable ideas, and trying to provide insights that can give you an edge in these markets. Follow my Twitter feed at Mayhem for Markets. Subscribe to my YouTube. You can find it at youtube.com/Mayhem for Markets. And check out my SPX options visualizer on the Bookmap Marketplace, which we'll be diving into shortly here. Let's get Bookmap on screen. So here we go. We got the S&P 500 on screen here. And you'll notice on this rightmost column that's called options, this is not a native Bookmap feature. This is a feature that I've added in through Cloud Notes. And what it does is it automatically goes through all of the S&P 500 options chain, and it analyzes where there's key levels of positioning and flows when we're in the cash session and we're trading. So this can be a pretty valuable tool because you can get a sense as to, you know, what Bookmap provides with the resting liquidity levels and where people want to transact. We can see there's this huge offer above, a big bid below. We can get a sense as to where people want to transact, and then look at that. That huge offer above coincides directly with our largest key area. That's important, and that's not a coincidence. That's giving you a sense that options positioning and resting liquidity have big interconnectivity in the S&P 500. And this is something we see time and time again as we're trading throughout the day, which helps to build confidence in not only how we may trade the market directionally, but also where we may enter and exit. So that's one of the reasons I built this tool, because there's so much interconnectivity between the options market and price discovery in the S&P 500. And when we zoom out, we can just see those are the largest areas of resting liquidity. So we're going to zoom the screen in just around those levels, at 49.94 area, and this probably, let's call it 49.48 here. And the NASDAQ is a much less liquid contract. So just to give you a sense, the S&P is trading at 30,000 contract order book depth right now. That's not liquid for the S&P, by the way. Liquid for the S&P is 50, 60K. We'll see how that changes as the cash session starts at 9:30. We're just about 8 minutes away from that. But this is not like, if we saw that during the cash session, that would tell you there's a more leptokurtic distribution of tails. That is to say, it takes less volume to move price more. So in those types of trading situations, I would take smaller position sizes with larger stops, because you have to be aware that you're going to get more movement, and you don't want to necessarily be pushed out or take a larger loss as a result of that. So you got to adapt accordingly. So let's go back to the NASDAQ. If the S&P isn't liquid with 30,000 contracts, what do you think the NASDAQ is with 5,000 contract order book depth? It's not a very liquid contract at all. This is one of the reasons it's higher beta. The other reason is that options actually exert less of an influence on the NASDAQ. Yeah, Jim, sorry about that. I noticed that echo. It should be fixed now. And so on screen, you've got NASDAQ, you've got the resting order liquidity. There's not a whole lot on the book here, but you see some at 17,800 above us. So there is at least some open orders, people looking for higher prices to exit this. But we can also see, again, it's not a very liquid trade. And here we got crude oil. It's just sort of at that key level we were talking about. So we're going to continue to keep a close eye on crude here. We'll see if we get any kind of action out of it today. We'll zoom out. Not much resting liquidity either way. Here's a 10-year note futures. Pretty much flat. Not a lot to catalyze this thing moving one way or another yet. We do have a 3-year note auction coming up with results posting just after 1 p.m. I think that'll be interesting to pay attention to. It won't have as much of a dramatic effect on the 10s specifically, but we can watch the 2s, 3s, and 5s, see what kind of changes we get there ahead of that 10-year auction. Here's the 30 on screen too. This one tends to be the higher volatility contract, less liquid. We'll be watching this one in the intermarket dynamics today if it has any movement. Then we've got gold on screen. Gold just doing its thing, consolidating a bit. It is pulling the point of control higher. That is constructive. And we've got the yen. I'm going to switch up the yen and the euro here, just because I tend to look at the euro a little bit more than the yen. So there we go. We've got the euro on screen as well. The euro is about 70% of the US dollar index. So I really like to watch it to get a sense as to how the dollar's moving. And it is a relatively liquid currency contract. So we've got about 5 minutes left until the opening bell here. And the only real news that I have is just some geopolitical escalation. The Yemen Houthi leader saying, we will further escalate if the attack on Gaza does not stop. And we can expect that that would mean more disruption to Red Sea shipping. Overall, it hasn't had a tremendous effect on international prices yet, though if this conflict goes on long enough and the issues with the Panama Canal continue as well, which is separate and distinct but a compounding issue, 3 to 6 months of this could start to build pressure in prices. Could start to cause some cost push inflation. But for now, it's still a little bit early yet. And folks, if you have any questions about anything, feel free to drop a question in the YouTube, in the Discord on Bookmap. Just tag me in there. On the Traderade Discord, tag me in, or leave a reply to the spaces. We did get Red Book year over year at 8:55 a.m. Came in better than I think people were expecting at 6.1%. That's a measure of retail sales building year over year by 6.1%. The prior reading was 5%. So that's pretty constructive news. At 10 a.m., we get the RCM Tip Economic Optimism Index. It's not typically a big mover of markets, but it's still an interesting data point to look at. The previous reading was 44.7. The consensus for this reading is 47.2, or an improvement. At 11 a.m., we'll get total U.S. household debt for Q4. The previous reading was 17.29 trillion. And then we've got some Fed speakers, because what would we do without them? Messer at 12 p.m., Kashkari at 1 p.m., Collins at 2 p.m. And so once we have some of the cash session data from the S&P options market, we will get the live scan of the most active 2 calls and puts, which tend to be pretty important for how the markets are moving. And so usually within about 15 minutes, 16 minutes, that'll populate on the right side. This data right now is from yesterday. And what's really interesting is that hot call at 155,000 volume. That's some of the highest volume we've ever seen for the most active strike. And it's funny because at the same time, the S&P futures contract was less and less liquid than what we typically see. So you've got this kind of dichotomy happening where on the one side, you've got huge amount of options influence. On the other side, you've got less people directly playing the futures market. So options are really becoming, if they have not already become, the tail that wags the dog. Got about 2 minutes left before the market opens here. Just going to step away for just one moment. I'll be right back. All right, folks, I am back here. Just about 1 minute from the cash open. It should be an interesting trading day. I expect it to probably be more of a balanced day than anything else. I'm not looking for too much price action here because we've got that really strong buffering effect from these passive decay flows. On the other side of that, you seem to have this buy the dip mentality on any selling, and I can understand it served people well for a long time. So we'll have to pay attention here, see how the trading day goes. But for now, watching this, just looking for how the opening range takes shape. I like to look at the 20-minute opening range in the S&P and the NASDAQ, and then also, of course, watching the options flow. Because, if the options flow is not in balance, if it's tilted towards demand or supply, that has a big effect on the price action as well. Market on balance, opening imbalance, about 6 million on the buy side, not too much there. We are live now, cash open, ding, 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 that's happening as we speak here. Got a little bit of liquidity building on the upside here, 49.85, offer just appeared there. We see some thickening up above us here as well. So someone asked on the right side of the screen, are those options only 0 DTE or all expirations? They are all expirations, because my backtesting has found that when you look at full chain, you get a lot more interaction with price. So you'll see that the flows and the levels, the key levels, the gamma flip, the vol trigger, all of that are based on full chain analysis of the S&P 500. So there's about 10,000 data points that, or I'm sorry, about 250,000 data points across about 10,000 contracts that are analyzed every minute. So we'll zoom in just a little bit here. Again, we do see that build of demand above, which is constructive overall. Let's check in with our friend the NASDAQ. Very similar look, just a little bit more beta than the ES contract. Little bit of a bid here in the 10-year note futures, which is constructive with rates coming down a tad. And the euro is getting bid, which is good. That means the dollar's coming down. That tends to be constructive for markets. S&P coming back here to the VWAP level and point of control. And pushing below, seeing a little bit more selling pressure here. And we do see some more liquidity building below as well. So we'll be keeping an eye on that. These two really big levels are what I'm watching pretty closely. Someone has an idea of wanting to, sell into just below 5,000 and buy into just below 49.50 here. Do I day trade the NASDAQ? Someone's asking in the YouTube. When there's opportunities, sure. We're looking at the S&P, the NASDAQ, crude oil, 10-year note futures, 30-year bond futures, gold, euro, and yen to get a full composite of all these intermarket dynamics in the microstructure. Those relationships are important to keep track of. There's a lot with how these things can move together, more than perhaps some may appreciate, and that's why I like to dive into this stuff, to hopefully help y'all gain a broader view on the market and why it moves the way it does. And thank you all for tuning in, everyone on the Discord. Just if you don't mind muting your mic when you're in the channel so your background noise doesn't come through, that will help. And you could see when we got that sell, there was a little bit of demand. So far, selling pressure seems to be offset by that decay we were talking about, those passive flows kind of rebidding this market higher. And again, you still see that liquidity thickening up above more than below. So looking constructive overall so far, but we need to see this range built and then how we break out of it. So still watching, not taking any trades yet here. NASDAQ looks a lot worse than the S&P. That's not a good look. You see this versus this, that divergence? That's ugly. Someone asked, does my system auto trade? So I do have algorithmic trading systems. I don't give them full self-driving, so to speak. I like to manage that. Now, that doesn't mean I won't put a limit order or a bracket order or things like that in once I have a signal fire, but full auto trading systems, some of them work really well, some of them work well and then blow people up. It just sort of depends, and some of them don't work at all. I am not exactly at the point where I feel like just giving it complete control. S&P getting a little bit of gravity from the NASDAQ here as well. When the NASDAQ is bleeding like that, it is likely to drag the S&P lower. So that is something to pay attention to. It kind of overwhelms some of the constructive flows that we see from decaying theta and delta. Let's take a look around some of these other markets here. We've got crude starting to build off of its lows, bouncing off the point of control, breaking above VWAP. Starting to look a little bit more constructive there. Still got some more work to do before it breaks out of that range we talked about earlier. We've got rates starting to move higher with bond prices moving lower, but again, touching this point of control, nothing to make of it yet until it breaks below it and builds acceptance. 30-year bond, pretty similar picture. Gold getting shellacked a little bit here as we see rates rising. And the euro coming off those highs, but still looks relatively constructive intraday. And then finally the yen, not doing too much. We do have some, what would a day be without unusually aggressive buying of NVIDIA calls, right? Well, we do have some more of that today. Got the 690s bid for this Friday, 123,000 of premium. Oh, look at that. Another 690 sweep coming through, 371,000 for NVIDIA for this Friday. Lots of demand at that strike. And that's been going on all morning here. Even some of the 700s and 710s bid. 710s bid for this Friday at the open, 262,000 in premium. And that's most of the unusual equity options buying this morning is just NVIDIA. It's basically about half the board. You have some SMCI, some DWAC, some Chipotle, some TQQQ. But NVIDIA just dominates. I think if we add up all the premium for the NVIDIA buys, it's over $1 million in premium that was put into NVIDIA so far. And it's only been 8 minutes. Amazing. Oh, here's a funny headline. Aisha's out there. She'll appreciate this one. Former WeWork CEO Adam Neumann aims to buy bankrupt company with Third Point's backing. We're gonna come full circle on this one. And folks out there, if you have any questions, feedback, otherwise, always open to it. On the Bookmap Discord, be sure to tag me in so I see that. I've got the YouTube chat open, so I'm always happy to reply there as well. And you can reply to the spaces. We're on 3 different venues right now. I plan to expand this more and more to multiple platforms, and in the future, live stream the video to Twitter rather than the audio, so it can be more helpful to y'all. Just kind of getting everything together as we build on this. And we're going to get some more information from the National Transportation and Safety Board today about Boeing's 737 MAX 9 cabin emergency incident. We do see price building now. We actually have a bid back in the market. NASDAQ coming off its lows, helping to push the S&P higher, which comparatively looks a whole heck of a lot better than the NASDAQ. Now let's zoom out a little bit here. Haven't seen too much of a change in that resting liquidity. Again, more above than below in the S&P, which is typically constructive. So we're going to be paying attention to that, particularly watching these three offers just above price. See if they build, see if they fade. That kind of gives us a sense. But I think the market's telling us here, at least, it wants to try to push this thing higher by at least 7 handles, possibly 12 or more. The NASDAQ still has me concerned, though. I'd really like to see it leading the way rather than lagging as much as it is. And I think in order for that to happen, we do need to see some more relief in rates and in the dollar, and we just haven't seen that yet. And look at that. You see one of those resting offers above being pulled out. That's something I'm watching here. And we see some more building below. So we might have to reevaluate what we're looking at here. Let's see what the NASDAQ's doing. It's testing its lows. So, you know, the market's a little skittish here. You've got those offsetting flows from decaying options, but it doesn't seem to be enough to just dissuade some of the selling pressure we've seen so far. About 12 minutes into the session, we'll give it another 8, then we'll have our opening range, and then we can start to look more intently at that to see what kind of clues it provides, if we're able to break above or below, or we just balance within. Let's take a look around the world of options, see if there's anything more interesting happening here. Oh, look at that. Palantir 21s. Got a 162,000 premium bid for this Friday. Someone's looking for Palantir to go to 21 by this Friday. Wow. That's a pretty spicy addition. Of course, the stock right now is trading $20.79, up 24% today after those much better than expected earnings. This is one of the real players in the AI space. Tesla 190 is also getting a pretty big bid for next Friday, 130,000 premium there. And SMH, I mean, what would a semiconductor rally or an NVIDIA call-driven rally be without that? 200 strike. Someone just threw 142,000 premium at that one. So that should help a bit with the NASDAQ. The amount of flows coming in and the options that are so bullish should help to give it a little bit of a bid. But to be constructive on it, we need to see it build that range, break out of it to the upside, of course, be above this point of control. So far, still more work to do. And S&P still comparatively more constructive than the NASDAQ here. Let's take a look around the rest of the market here. You've got oil just sort of consolidating. Ooh, got a nice relief in rates here. Look at that bid in the 10-year. That's pretty big. That is helping the S&P. It should help the NASDAQ as well. Got a similar look in the 30-year note futures. Gold's got a bid off of that. And, of course, the dollar's weakening, so the euro's moving higher. So that's all constructive for the stock market. Rates lower, dollar lower, tends to be risk higher, right? Absolutely incredible move in Palantir, though. That's just breathtaking. Wow. So far, Palantir has traded 82 million shares. The average volume for this stock in a whole day is 55 million shares, and we're only 15 minutes into this day. How about that? That's crazy. It's basically another meta-like move. Investors really like what they heard there, particularly the commercial growth reaccelerating, demonstrating that there is viability outside of just government contracting. We got this offer thickening up here at 49.80. We've been watching that one pretty closely. Seems the market wants to at least fill that offer. NASDAQ starting to build off its lows. Seems like it wants to put in a higher low here. We had a bit of a higher low here, a bit of a higher low here, and you could say this is a higher high, so maybe we're starting to see an intraday reversal here. And you do have a little bit of passive accumulation by icebergs, plus 70. So some larger traders buying into the weakness. And again, notes and bonds still have a pretty good bid off their lows, as does the euro. So that's usually positive for risk. This is the intermarket dynamics that we should be looking at when we're trading this stuff. Whatever time frames we're trading, it's important to be aware of how other factors influence price. We can come into the day with any bias we want, but we can't let it affect how we trade. We have to trade based on the data. And folks, Bookmap is such a great way to view the markets. It's one of the reasons that I really enjoy using it, particularly when you have other data points that you can correlate with it, because you're seeing where people are positioning. And you can look at this in the DOM to an extent, but I really like the heat map view personally. And we can see the midpoint has come on. What does this mean? This midpoint is telling you there's a balance in this market. Between the puts and the calls, right now we are kind of in a balanced market. So what does that suggest? It suggests that we could start to move up to that level. Now the midpoint is starting to actually fade because there's more activity on the call side than the put side, with a deviation of over 20%. So that starts to look like a market that's less balanced, that there's more demand than supply, which can be constructive here. So we'll be watching these hot calls and hot put levels and the warm levels. For those out there that are trying to understand what they're seeing on screen, the hot call is the most active call in the entire S&P chain. The warm call is the second most active. The hot put is the most active put on the S&P chain, and the warm put is the second most active. So watching this and then also having these key levels visualized right alongside resting liquidity gives us a really good sense as to what market participants want, what they're looking at, where important price levels are that we can look at as potential entries and exits. And that's why these two systems work so well together. We can see the midpoint coming back, volume starting to balance out again between the puts and calls. NASDAQ taking a plunge here. So much for high or low. Nasty stop out, 256 contracts stopped out as we make this push lower. S&P still comparatively stronger than the NASDAQ. No new low in the S&P. And if anything, it looks a little better overall, not only because of the momentum, but because we're starting to see buyers pull price higher. And that's just, this is high volume distribution in the NASDAQ. So this is not what you really want to see. You can see the cumulative volume delta dropping further. See what's going on here. Rates still not really doing anything. They've dropped quite a bit from the open, but market doesn't seem too concerned about that. Dollar still dropping versus the euro. Apparently we're going to get some remarks from Yellen from the Financial Stability Oversight Council pretty soon. Now, folks, it is now 9:50, so we can say we've built the opening range. Now it's a question as to where we go in it. So I'm going to just pull up a different chart here to map it out for me. Yeah, this is not looking so good. I gotta say, this is looking like a breakdown below the opening range as we watch. We're building acceptance. We're actually building quite a bit of volume down here. We've got bids below increasing. So I'm going to say at this point, we've got sellers overwhelming buyers. And with the passive flows, it should be helping to buffer this, not having that much of an effect. That's telling you that there's a decent amount of people that are looking to take some profits here. Let's see if we get any clues from the CBOE here in terms of the market dynamics that are playing out. We do see some hedging flows increasing. I'm just looking at this off screen. And we see the market right there at the second most active put. S&P point of control pulled down now by sellers. NASDAQ made a significant new low, really breaking below its opening range as well. So I'd say this is a breakdown. Sellers are favored in this type of price action. That hot put, wow, that's quite a bit lower there too. It's about 49.44 on ES. Let's see what that is on SPX levels. I'm just going to go onto my Discord and query my bot where it gives me all of this information. Yeah, it's about 49.20 on SPX. And that's, you know, it's interesting because, again, we've talked about convergences. We've talked about how that can add to confidence levels of important areas. Well, I'd be watching this level pretty closely today on screen because that hot put and that large level of resting liquidity on the bid that we've been watching, they're pretty darn close together. So someone believes those areas are important. Similarly, up above, we've got this key gamma level. That's the largest level of net gamma exposure, and that's pretty much exactly where that large resting offer is. And this is one of the reasons that we can start to tie together how options are positioned and where flows are going with how the market is trading, which is one of the reasons the SPX options visualizer is so valuable. And it's on the Bookmap Marketplace Live. It is available for anyone and everyone to check out. We just launched it, and I'm really excited because it's the first of many tools like this that are going to be coming out. So we've got about 5 minutes left on the stream here. I hope it's been helpful to everyone. Of course, if you have any questions about anything, let me know on the YouTube chat, on the Discord, in the Twitter Spaces replies. Always happy to talk. My whole reason for doing what I do is to try to help people become better traders because I realize this is a game where the odds are stacked against us. A lot of people fail. I've learned a lot in the 19 years that I've been trading these markets, and I want to try to help you gain better odds as well so that you can not only survive, but thrive. That's the whole goal. So just to be clear for today, with the downside break of the opening range across the S&P 500 and the NASDAQ, I would favor lower price action. If you go back to the earlier part of the recording, I mapped out some levels on the ES and NQ charts that I'd be looking at for where we may go. If you're on the Traderade Bookmap, or if you're on the Traderade Discord server, I should say, you can always check out the bot to tell you more about where some of these levels are as we navigate through the day. And I'll also be doing some live streams on there later to talk about what we're watching. I do try to jump on our own Discord regularly and talk about what we're seeing on Bookmap and in the options flows and otherwise, and how that may move markets. And if you like Bookmap and you like what you see, I mean, I use this every day. I think it's a very valuable system. You can actually get up to 40% off by visiting traderade.com/bookmap. Just scroll down to the special offers. So S&P looks like it's trying to put in a new low here. There's a decent amount of volume in this selling. NASDAQ, pretty similar look, a little bit stronger the S&P in this recent move, but still looking pretty bad below that 20-minute opening range break. You've got crude sagging just a little bit. Rates continuing to come down, so the market doesn't seem to be particularly happy, even though rates are coming down, and, you know, for at least until recently, the dollar was as well. You know, I don't know if they offer a trial demo trader. Do you have that information available? There was a question in the YouTube chat about whether Bookmap offers a trial. And S&P did put in that lower low after a lower high. I mean, again, the basics here are telling us this is a downtrend. We've got the opening range break to the downside, and you do have a lot of folks wanting that hot call. That is the hottest, that is the most active options on the chain, but it just doesn't seem to be able to overwhelm the distributive pressure. The NASDAQ was the early clue. Like I was saying in the beginning of this, I really like to watch the NASDAQ for clues on intraday momentum because it's been so important in multiple time frames. Today's no exception to that rule. It gave us the early hints. And the divergence we're seeing between the NASDAQ and the 10-year, where the 10-year is saying, you know, hey, rates are coming down. The NASDAQ doesn't seem to care. That's not necessarily the best look. Typically, you should get a better bid out of that. Yeah, the stream is recorded. Troy, great question. It is on the Bookmap YouTube, so you can come back, review the entire presentation. I did about a 20-minute presentation with about 24 slides, talked a little bit more about the big picture and what I'm looking for, and then we zoomed into the microstructure with Bookmap. And that's one of the things I really like to do, because even if you're just trading small time frames, understanding what the big picture looks like in the markets, where there's key levels and the volume profile and price action on multiple time frames, helps us to prepare for trading shorter time frames, because those levels still matter. That positioning still matters. Where people wanted to transact on longer time frames still matters for the shorter ones. So we'll be getting comments from Yellen pretty soon. I've got to wrap up the stream. Just got about a minute left. Really appreciate everyone tuning in. This has been a lot of fun. I'll be here every Tuesday at 9 a.m. to do these streams for 1 hour. So be sure to set a calendar or check out the Bookmap YouTube where you can see when they are posted. And you can set your reminder there. And if you like the stuff I'm sharing, check out my work at Traderade and at Macrovisor. Visit my Twitter, which is Mayhem #4 Markets, Mayhem for Markets. Same name on YouTube as well. And you can get up to 40% off Bookmap. Again, traderade.com/bookmap. If you like the plugin I've shared, traderade.com/SPX. You can add that right into Bookmap from the marketplace. So thank you everyone for tuning in. Really appreciate it. This has been a ton of fun, and looks like the market's continuing to move lower. So the plan is working. That opening range breakdown and that lower momentum clued in by the NASDAQ seems to be feeding into additional downside. So best of luck to everyone out there for the rest of your trading day. I will catch up with you soon.